Welcome to the video series on corporate accountancy. This is Satish Kumar N. Mahale, Assistant Professor of Commerce, Government First Grade College, Bada. In this video, we are going to understand the preparation of final accounts of companies as per the Companies Act 2013 with adjustments related to managerial remuneration. The following is a trial balance of Sunil Company Limited for the year ended March 2014. Stock on 1st April 2013 75,000. Purchase returns 10,000. Purchase 2,45,000. Sales 3,40,000. Wages 30,000. Discount 3,000. Carriage inward 950. Furniture and fittings 17,500. Salaries 7,500. Rent 4,000. Sundry expenses 7,050. Surplus as on 31st March 2013 16,350. Dividend paid for the year 2012-13 9,000. Dividend distribution tax paid at 17% 1,530. Share capital 1 lakh. Debtors and debtors to 27,500. Creditors 17,500. Plant and machinery 29,000. Cash at bank 46,020. General reserve 15,500. Patents and trademark 4,800. Bills receivable 5,000 and bills payable 7,000. The following are the adjustments that are given. They have asked us to prepare the statement of profit and loss for the year ended 31st March 2013 and balance sheet as on that date, taking into consideration the following adjustments. Stock on 31st March 2014 was valued at rupees 88,000. They have asked us to make provision for income tax at 31%, provide depreciation for plant and machinery at 15%, furniture and fittings at 10%, patents and trademarks at 5%. Next, on 31st March 2014, outstanding rent amounted to rupees 800, while outstanding salaries totaled to rupees 900. Next adjustment pertains to the Board of Directors proposed a dividend at 15% per annum for the year ended 31st March 2014 after the minimum transfer to General Reserve as required by the law. The rate of dividend distribution tax is assumed to be at 17%. They have asked us to make provision for doubtful debts amounting to rupees 510. They have asked us to provide managerial remuneration at 10% of the net profits before tax and before deducting managerial remuneration. So let us have a look at the profit and loss account for the year ended 31st March 2013. Revenue from operations amounted to 3,40,000. Other income amounted to rupees 3,000. So the total revenue was 3,43,000 rupees. And coming forward to the expenses, purchase of goods amounted to rupees 2,35,000. The excess of closing stock over opening stock, it is a revenue. That is why we have taken it as a minus amount, amounts to 13,000. Employee benefit expenses amounted to 38,400. Depreciation on fixed assets was up to 6,290. Other expenses amounted to rupees 13,310. Managerial remuneration amounted to rupees 6,300. The total expenses amounted to rupees 2,86,300 and the profit before tax amounted to rupees 56,700. Provision for income tax is made at 31% amounting to 17,577 and net profit for the year amounted to rupees 39,123. Now going and looking at the notes, the note 1 revenue from operation prepared as follows. Okay, then we have a note 2 other income. Then we have a discount earned totaling to 3,000. Note 4, note 3, then we have purchases less returns amounting to rupees 2,35,000. Note 4, increase in closing stock we compare both increase in opening and increase in closing stock. Whichever is higher, if the closing stock value is higher, then it is termed as a profit. Here we have um, higher value of opening stock amounting to 13,000, amounting to the difference is 13,000, so it is given minus, it is a profit. Employee benefit expenses, we have two particular employee benefit expenses, wages and salaries, totally amounting to 38,400. The adjustments for depreciation are calculated as follows, amounting to 6,290. The other expenses are calculated as follows for carriage inwards, rent, sundry expenses, and also provision for doubtful debts, amounting to 13,310. Then we have the calculation for managerial remuneration as said in the problem at 10% of the net profits before tax and before providing for managerial remuneration. So that was amounting to 3,43,000 rupees minus 2,80,000. So 10% is calculated on 63,000 rupees, amounting to 6,300. Here we have the balance sheet of Sunil Company as on 31st March 2014. Equities and liabilities. You have firstly the shareholders funds. Under that we have share capital 1 lakh, reserves and surplus 42,893. Current liabilities, under that we have trade payables 24,500, other current liabilities amounting to rupees 8,000, short term provisions amounting to 35,127. So total equity and liability amounting to 2,10,520. Next we coming to assets. In the asset side we have non-current assets. Under that fixed assets we have fixed assets, note number 6, we have 44,510, that is after depreciation. Current assets amounting, under that we have inventories and trade receivables amounting 88,000 and 31,990. Cash and cash equivalents amounted to rupees 4620. So total assets also amounting to 2,10,520 rupees. Here we have notes pertaining to the balance sheet. Note 1 related to share capital, totally 1 lakh. Second note, which is important, which contains a few adjustments of reserves and surplus. Reserves and surplus balance on the opening balance we have 15,510. Then we have the additions during the year at 1,956. Then surplus opening balance we have 16,350. We have added, from that we have deducted dividend paid for 2012-13 9,000, dividend distribution tax paid 1,530, transfer to general reserve 1,956, proposed dividend at 15% amounting to 15,000, provision for dividend distribution tax 2,550. So total of reserves and surplus amounting to 42,893. Then we have the trade payables amounting, the note here, two items. One is the trade payable and acceptances amounting to creditors amounting to 24,500. Here we also have the other current liabilities totally amounting to 8,000. Short-term provisions, we have three items under that here. Proposed taxation, proposed dividend and provision for dividend distribution tax, totally amounting to 35,127. Then we have tangible fixed assets, plant less depreciation, furniture less depreciation, patents and trademark less depreciation as per the depreciation is provided as per the adjustments, and the total amounting to 44,510. Trade receivables, after deduction of provision for doubtful debts amounting to 31,990. Then we have cash and cash equivalents. Under that we have only one item, that is balances with banks, 46,020. So this is the manner in which we prepare final accounts as per the Companies Act 2013, when we have to prepare both final P&L account and balance sheet, along with provisions provided for providing remuneration to managers. I hope this problem gave a insight on how it is prepared. For further details, you have to refer the format given in the textbooks. You can refer the textbook by Corporate Accounting by Dr. T.N. Godi, and also you can refer Corporate Accounting by P.C. Tulsian, and also other reference books you can refer as per the university syllabus. Thank you for watching this video. Until the next video, bye.